What's good, everybody? So today is the 31st of January 2026, and a month is gone, and I've been showing people how to effectively navigate the markets for quite some time. And I just thought that today I want to come here on YouTube yet once again and share a bit of some insights for this week that will allow you guys to prosper for the next week and the next best week that is actually to come. One of the things that I always get asked by people is, Ngaba, how do I win when it comes into the financial markets, right? Number one, you want to make sure, and again, this is not financial advice, this is what I do on a personal basis, okay? Number one, have a strategy that generates alpha into the market. A lot of things that people speak about are false. Okay, a lot of things that people speak about are, they don't exist when it actually comes into the actual market, right? And I'll paint a picture for you. So when I look at the market, I look at things like linear regression as an example. I build my probability models using Monte Carlo simulations. I use things like Markov chains, Markowitz models, and then I use risk parameters or risk just the strategies like understanding value at risk in the market and what it actually is and how institutions effectively navigate the market. A lot of institutional traders, they are not thinking about how much money am I going to make. They're thinking about how much risk am I going to put in this particular trade and how am I then going to manage this particular risk. And by them managing risk, they're then able obviously to grow their capital. Okay, so one of the things that I always say you want to understand the true nature of the market, which is largely, yes, based on numbers, understanding things like mean reversion, Z scores in the market, right, standard deviations. Those are the things that will help you effectively get to the next level, because when you understand the market based on mathematical formulas and context, that's what allows you to effectively understand what is actually going on. There's a particular gentleman that was a physicist, and his name is Isaac Newton, right, a scientist in actual fact. And Isaac Newton was very good at calculating the perspectives of how motion basically moves, right? And that's where we get Newton laws, right? But he was terrible when it comes into the financial markets. So he says that he can calculate, moving bodies, but he can't calculate, moving variables, as an example, when it comes to trading or when it comes to, financial engineering, because financial engineering and mathematics is completely two different things from physics that you actually get, right? So I always say to people that one of the ways in which you learn to grow, as a trader is understanding, how the hedge funds play this game. Here's a typical example. I always say to people that you cannot play, soccer with rugby rules, because what happens, you end up, being taken out of the game because you simply are breaking rules. And the sad reality is that this is what most of us retail traders are effectively doing. We're trying to play a game that is controlled by 95% or that is controlled by institutional traders for most of the time that move on trillions of dollars in the market. And we're trying to play the game at our own basic level, right? Where we're looking at things like, imbalances, fair value gaps, breaker blocks, order blocks. We call ourselves price action traders and all of that, but we have no idea what level 3 data is, right? And so for me, I always say that, from a reference point, it's always very much important to see what is the game that you're playing and how do the guys that you're competing with actually play this fundamental game. Okay, not to say that you cannot make profit from what you actually are doing in the market, but it's very important to understand who you're competing with, how they effectively play the game, and trying to align yourself to that particular dynamic. And that's how over the past 18 months, I've helped over 13 people, make the first 6 figures, 5 figures, 6 figures in dollar value, right? So how we've been able to move from that is by learning, these models that are largely based on mathematics, financial engineering, and a lot of quant model testing, right? So and that's how we've been able to get strategies that generate alpha in the market. If you cannot validate a strategy through alpha, or if you cannot validate a strategy that would then otherwise generate alpha, then it's probably not a strategy that is worth trading. Otherwise, then you start blaming your insight on psychology, for example, where the actual problem is with your strategy, as an example, right? So these are things that I would love people to understand, that yes, you do get macroeconomics, you do get a lot of things that we actually look at when it comes to fundamental analysis in the market. There are quant funds, for example, where you look at macro models, but what's very, very important, even from a technical perspective, for you to understand that how people are playing the game is not how the game is actually played. So what do I implore? What would I do if I were you? If I were you, I would do the following, right? I would look at the markets, right? And I would look at what has granted hedge funds and investment banks, as an example, what strategies do they employ in the market? So we could talk like even HFT firms that use statistical arbitrage in the market. What is that, right? What are the kind of calculations that they use? So if you talk about jump diffusion, if you talk about Ornstein Uhlenbeck model, what are those particular models, and how can you then start to navigate your trading around those particular concepts? And you'll see your trading will be much more different, because as opposed to just focusing on basic market structure of high highs and high lows, you're looking at the mathematics behind what effectively moves the markets. Okay, so that's basically what I would implore you guys going into the new week. We're going to talk a lot about macroeconomics, what the real market is, what the equities market is, and what I would do if I were you, I would also look at the options market. Why? Because the options market is bigger than the CFD market. It's bigger than the futures market. It's bigger than the currency market combined. And a lot of people are now getting into options, and that will help you to understand flows in the market, how the market basically moves based on flows. Okay, and that is imperative. That will help you get to the level that you effectively want to get to. So get that, guys. Wish you guys a very, very great week, and yeah, let's